Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 12th of November 2019, so welcome everyone. Welcome to this Tuesday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, guys, so now before we jump in, of course, first of all, do apologize for the late start a little bit here. I'm having a few technical issues. Now, before we jump into the charts, a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD Research tab, which we update on a daily basis, and I believe you can find a lot of useful stuff here for yourselves, guys, so feel free to visit us here on jdbank.com and just click on the tab on the top here called Research, and yep, it will take you to our little page which we update, as I said, on a daily basis. Now then, quick mentioning of a few charts here. So the first one I want to touch on here is actually the FTSE 100. Now, it should be a different way around like this. Now, looking at the FTSE, and this is what I was talking about this morning, and basically I was saying, guys, to keep an eye on this 7,351 zone. So if we get a push above that, then in a way there could be a chance for this one to drift higher again. For now, as you can see, that we did get a move higher, but it found good resistance near today's R1, which is roughly around the 7,300 and 7,371 zone. So basically, for now, guys, of course, we will continue targeting the upside, but slowly, because in a way, looking at all this price action, it seems that there could be a bit of a problem here with the upside, but probably we will keep an eye on this, of course, on this barrier where it found resistance near the 7,371, and also we'll keep an eye on the 20 SMA here inside a Bollinger Band. Now, just for that extra confirmation, a push above that could in a way lead towards higher levels. If you are now long, let's say after kind of the 7,351 level, that's wonderful. Probably the suggestion here would be to bring your stop loss just before break even, or in other words, to break even, just because you can see that the move higher is not really that strong, and in a way, we could, in order, let's say like this, that let's be very careful here in case this suddenly decides to reverse to the downside. So it's currently getting a hold up around here, and near this it got a hold up near the R1, and which also actually coincided with the 20 SMA inside a Bollinger Band. So that's why, guys, we are kind of more positive still than negative, but the only thing is that we'll try to protect ourselves now in case this suddenly reverses back to the downside, because if it starts dropping lower and if it breaks below this upside line again, then in a way it could turn out to be ugly for the bulls. But this is the level that I was talking about previously, the 7,251. That's or in a way the 7,250. That's the level we need in order to consider further decline. So keep your eyes on these two, guys. S&P 500 now. It closed yesterday. It closed slightly in the positive territory. Let me just double check myself, actually, guys, because yes, I mean, so I do apologize. It closed slightly in the negative territory, but you can see that it still remained above this upside support line taken from the low of the 8th of October. Now, it's a bit of a tentative one. I do understand that, but we'll keep an eye on this one, and if we see the this line getting broken, then, well, I mean, we will start looking at lower areas. We'll start considering the downside, especially if it starts dropping below this little low right here near the 3066 zone. If we do get a drop below this, this would also place the price below the 21 EMA on the 4-hour chart, and in a way, from the short-term perspective, we could see a bit of declines here. So maybe even going back all the way here towards the 3028 zone, previously marked by the high of the 26th of July, and then we'll take it from there, guys. But again, for now, let's be very careful. In a way, like I said, even though it still remains above this upside line, for us to get a little bit more excited about higher levels, ideally a push above the 3098 zone would be needed, and that was the high of last week, and in other words, the highest point of or should I say in general the all-time high of the S&P 500. So that's why, guys, we'll take a very conservative approach in terms of the upside. We'll wait for a push above the 3098 zone, but if it doesn't happen, if we start seeing a break of this upside line, keep your eyes on the 3066 zone. That's the low of the 6th of November, and if we do see a drop below this, this would also place the price below the 21 EMA on the 4-hour chart. So keep your eyes on this one, guys. DXY, and I haven't looked at this one for quite a while, and you can see by the lines drawn here, some of them are valid, some of them are not. So basically we can get rid of this, and in a way it reached our target near the 98.42 zone. It is now kind of trading above the 200 EMA on the 4-hour chart. It's in a way it has got a potential to move higher again, but looking at this picture here right now, probably we'll be very careful here and wait for a push above the 98.42 zone first before let's say targeting higher areas again. So in a way, this is the barrier that we need to see DXY overcoming before examining higher levels, because a push above the 98.42 would confirm a forthcoming higher high, and we could then target the 98.65, which is marked by the high of the 15th of October. Or it could go a little bit higher here again, and let me just put this one on the chart, and we could target this little inside swing low here, marked near the 98.90 zone, and that's also near the high of the 10th of October, or should I say the intraday swing high of the 10th of October. So good levels here, but before we could examine the upside, we need that push above the 98.42. Here, at this point, it would be tricky to say that here, let's say it could drop maybe a little bit lower, then reverse back to the upside. This could be a bit of a, like I said, a bit of a gamble here, so that's why we'll wait for a push above the 98.42 zone. If it starts dropping lower, and if it starts dropping below the 98 zone, now this is where probably the bulls could get spooked a little bit temporarily, and we could then target lower areas like the 97.47 or even slightly below that. But initially, we'll just target that one. We'll see how it performs around around this level, and we'll take it from there. But again, for now, let me just quickly put this one right here, this highlighted area right here. This is the level for the downside that we're going to be monitoring in order to consider a possible move lower. Bitcoin, I've talked about Bitcoin. I've talked about Bitcoin this morning, and basically what I was telling you guys, to keep a close eye on this potential veg formation, so a potential falling veg formation. Now, again, we need some confirmation breaks first before we could, let's say, aim for higher levels on this one, because according to textbooks, according to the TA, in relation to the TA technical analysis rules, these patterns tend to break to the upside. That said, we need confirmation first in a way. So if we see a push above the upper side of the falling veg, yes, that's good. That could be a positive sign, but just for that extra confirmation above a push above the 9,250 zone, would be required in order to get comfortable with further moves higher, at least in the short run. And then we could aim for the 9,645 zone, marked by the high of the 4th of November, and then the next stop could be around the 10,480 zone, which is the highest point of October. So, guys, for now, with the upside, yes, we are in a falling wedge pattern right now, but we need that confirmation break first. And if, let's say, this doesn't happen, if this, let's say, the crypto decides to break through the lower side of the falling wedge, then it's no longer a wedge. Now it could be maybe a channel, could be something else. But in a way, how we could play the downside here is a drop below the 8,370 zone, 71 area, something like that, marked near the high of the 21st of October. This could in a way lead towards further declines here. And then, yep, we could target the lowest point of October near the 7,333 zone. So keep your eyes on this one. GBPJPY. Now, let me just clear this a little bit from a few lines. Now, this is still very interesting. I looked at GBPJPY last week, if I'm not mistaken, and basically I keep talking about the same thing here. Initially, I was talking about this downside resistance line that I removed just now, so it got violated, but the pair didn't quite travel anywhere. So in a way, for now, what we're going to do here is just going to monitor this nice range here that we've got roughly between the 139.44 zone and the 140.6970 zone on the upside. So a nice good pop through one of these areas could in a way lead towards a further short-term directional move. I'm not saying that this could lead towards a more of a medium term or something like that. No, a short-term one. For now, we're just examining that. But even, let's say, if it pushes above the 140.6970 zone here, yes, we will aim for higher levels. The only thing is that there is going to be a very important obstacle for the pair to overcome in order, let's say, for it to continue moving higher, and that's the 141.51 zone. That's marked by the highest point of October. So if the pair overcomes that as well, then yep, the sky's the limit again for this one, and we could see the pair moving higher. But if it starts dropping below the lower side of the of this little range here that we've got, then, and of course initially we'll aim for the 137.91 zone, roughly around here, marked by the high of the 11th of October, and also it coincides with the 200 EMA here on the 4-hour chart. We will initially target that, but in a way, to be honest, if that fails to withhold, then yep, further declines are possible, and this could drift towards this little tentative upside support line here, probably more of a medium term now upside support line taken from the low of the 3rd of September. So we'll keep a close eye on that one. But again, before we could kind of examine any further, let's say, directional move, short-term directional move, we need to see the pair exiting this little range here. Either of the sides will do for us because we're trying to capture a break here. NZDCHF. I looked at this one as well, and still we are hanging around here above this 0.6285 zone that I talked about this morning, and we're still below this little short-term tentative downside, well, actually not very a tentative one, but a short-term downside resistance line taken from the high of the 5th of November. In a way, we're still waiting for our break. With the upside, we're kind of a bit more on the conservative side. We're waiting not only for a break of this downside line, but also a push above the 0.6340 level, marked by the high of yesterday. And in terms of the downside, we need to see a strong move below this 0.6885 zone. As you can see, it continues to hold the pair from kind of moving lower. But ideally, of course, we would like to see a daily close below this. But we'll start considering lower levels if we see a 4-hour candle close here below this. This, of course, could increase the chances of a further move down here. We're not going to drag too much to the downside this one. We're just going to target the 0.6238 zone first, and then we'll take it from there. Maybe this one will actually move a little bit lower here towards the low of the 16th of October here near the 0.6217 zone, roughly around here. But we'll take it from there if we see that close at least of a 4-hour candle below the 0.6885. So for now, guys, until it's kind of trading in this little territory right here, we are going to remain somewhat neutral. Euro USD. EURUSD. So this morning I talked about this one, and basically I've removed this downside resistance line that was playing around here in a way because it got violated. But what I was saying as well, that we need to see a drop below this 1.1016 level before examining lower areas. We can see that we did get a drop, but we never kind of got a close here, at least of a 4-hour candle below this one here. So if we do get eventually that drop and that close of a 4-hour candle below this level, then we'll start considering a further directional move here, a further move lower towards the 1.0989 level, which is marked by the low of the 15th of October. Now, that said, I'm not really targeting anything below that yet. I would like to see how this is going to play out near this area, because again, this move here, yes, it would confirm a forthcoming lower low, and we could target this key area of support, which marks the low of the 15th of October. But don't forget that from the kind of short-term perspective, from the shorter time frame picture, or on the shorter time frame picture, we are quite overstretched here to the downside. So in a way, a bit of correction could be possible here. So that's why we do have this potential barrier here as an important one that we're keeping a close eye on. In a way, for now, that's the level, and this is what I was talking about this morning. This is the level that we're keeping an eye for now. But if it we'll start seeing that let's say that the pair is no longer kind of respecting this area and respecting, let's say, for example, the area somewhere around here higher, maybe the 1.1070, then we'll get rid of this. But for now, we're just going to keep it for now. Let's put it. We'll just keep it. And we'll see how it's going to play out. But again, if let's say this decides to reverse to the upside, but let's say struggles to push above its 200 EMA here on the 4-hour chart, or should I say struggles to stay above this 200 EMA above the on the 4-hour chart, then we could aim for another round of selling, potentially moving lower. But again, still the same idea remains here. A drop below the 1.1016 zone could do the trick here for more sellers, and we could see this one drifting to the downside. But in a way, as I said, we will only target the 1.0989 level first, and then we'll take it from there. With the upside, if we do get a nice, good, strong push above the 200 EMA, then we'll start considering higher levels. But if we start seeing another good push above the 1.1094 zone, roughly around here, then yep, a further move higher could be possible. But for now, it seems that the upside is slightly off the table. So let's see how this is going to play out near this level here, near the 1.1016. If it gets broken, then yep, we will consider further declines here. But not far, only up until the 1.0989. Okay, guys, once again, I do apologize for the late start here. I tried to kind of rush through this quickly here and trying to keep in my time. But I hope you found it useful. If you want to join me tomorrow morning at my Trader's Espresso, that's always 7 o'clock GMT time. And I hope you stay safe, guys, today. Be very careful, be very cautious. And like I said, yeah, please join me tomorrow morning at my Trader's Espresso, 7 o'clock GMT time. Thank you very much, guys, and I'll see you later. Bye-bye.